Hello, good evening, everyone. Welcome to all of you for today's session. Students, can you hear me? Everyone, can you hear me well? Tell me, please. What about others, please? Okay, now, please, everyone. All right, so students, just let me know whether you have been able to download the notes volume 1. Have you been able to access that? Advanced Audit and Assurance Notes volume 1. Have you been able to download? No sound? Really? No sound. 2% are saying there is no sound. Why they are saying like that? Yes, they have an issue, I think. Just a minute, please. They have an issue. Just a minute, please. So you see here, now, if you are unable to hear me, please, you need to follow this. You need to follow this. Now, tell me, can you hear me now? Others who are facing the problem? Good. Good. That's good. So, students, just like that, I opened the class here, lecture volume 1. It was here, and yes. Yes, you can download these. Volume 1 of notes, you can download like this. Okay, there you go. Volume 1. So, students, we have covered the chapter 1, that was the regulatory environment for audit in the last class. And today itself, we have to start the audit cycle, the audit process. This is the topic for today. And students, why it is called audit cycle? It is cycle. The cycle is that it is repeated every year. The whole process is repeated. So cycle, okay, every year. Now, so that starts with the acceptance of audits. Audit cycle that starts with the audit process. Now, the students, when we say the acceptance of audit engagement, that when, of course, that how to accept the audit engagement. What is the process? There is some formatting issue, I think, by my team member. They've not fixed it. Anyways, check that acceptance of audits. So the first of all, whenever a company approaches the auditor to get its financial statements audited, so what we have to do, we have to first of all assess that whether we need to accept their audit or not. And we need to identify, we need to obtain the relevant information which help us in deciding that whether we are going to, we should accept it or not. If there are any issues involved or not. If there are any issues involved, we try to resolve those issues. If they resolve, if they are resolvable, resolves the issue and accept the audit. But if the issues are not resolvable, we simply reject the audit. We simply reject the audit. So, students, let me connect it with my iPad so that I can explain it better over there. Just a minute, please. Now, can you see my screen? Just a minute. iPad. Can you see the iPad? I don't think so. Just a minute, please. Just a minute, please. Yes. Yeah, just a minute, please. I'm fixing it. I'm sorry. It's taking a bit time. I don't know why. Oh my God. Yes. Students, you need not to message now because I can't see your messages. You have to open the mic and talk to me if you face any problem. Okay? Please say yes or no in the mic.
Yes.
Okay, sir.
Yeah.
Yes, sir.
Okay, right? Because I just have shared in an unusual way my screen with you. It was not working. I don't know. I think there is some update which need to be updated, but I cannot end the class now and update later. I'll update it later on. Okay, now. So we said that audit acceptance procedure. Audit acceptance procedure. So first of all, auditor, what does auditor do? Auditor consider the factors whether we should accept the audit or not, and identify any issues present because of which auditor should not accept the audit, and then issues whether they are resolvable. If resolvable, resolve and accept the audit. If not resolvable, not resolvable, okay, reject the audit. Now means we cannot audit that company. Now, what are the issues? What are the issues which are so much important that we need to consider whether they are resolvable or not? What those issues are? So issues can be of two types. Issues can be of two types. One is that is called auditor related issues, and the second is client related issues. Client means the company which wants to get its financial statements audited. Client related issues. Now, so when we talk about auditor related issues, what they are? So first of all, auditor need to consider whether qualified to act as auditor. Qualified means qualified by law. Auditor is allowed by law to act as auditor of that company or not. Then the second thing, okay, allowed by law. Then whether resources available for audit, now resources, what is meaning of resources? Means staff, competence, and skill, experience, which is required to audit a company. Audit a company. Yes, whether those experienced auditor has that experience or not. Now, third, ethical issues. are considered, whether there are any ethical threat to independence of auditor, any ethical threats to independence of auditor. Now, next. So fourth point, that is, what is engagement economics? Ethical threat we have to study the full chapter over here, full section over here. What are ethical threats? How they can be dealt with? You know that. So engagement economics. What does it mean? Whether this client is profitable, whether we can sell more services to them in the future. So these things are considered. These things are considered. So once we are satisfied, then next. First of all, client screening is performed. What is client screening? Know your client. Due diligence, we discussed in the last class. Same. We need to know who is the management, who are the owners, what are the source of business funds, what are the types of business, what is the purpose of business. Client screening is performed. What is the repute of the management of the company? So client screening is performed. Now, next. So the second point is, after client screening, we are satisfied it is not that risky client. Then we say, okay, obtain references and verify those references. We say, okay, you want us to audit your company, give the references of the person who can give us information about you. Who can give us information about you? Now, the next point. So students, and then we contact with those people to get information about the company. We contact those persons, we get information about the company. Now, next point. Third point, contact with present, or which is also called predecessor. In other words, which is outgoing auditor. We contact with that. We ask them that why you are leaving this company as auditor. What is the reason? Now, if there are any serious reasons because of which we should not be their auditor, tell us. Yes. Now, next point. So students, we contact with their present auditor to get information that if we get any negative signals about this client because of which we should not accept their audit. Once things are decided, once matters are means that we are satisfied by all this information. Now come to the notes. Yes. So students, once things are settled, so you see, I explained in another way, it might be possible that the client's management is political exposed person. Political exposed persons are very rare, very, what we say, risky, politicians especially. Now, so students, once we are satisfied, now we say, okay, now two preconditions we need to verify. Preconditions. Listen, I am satisfied by all your processes. Okay, now there are some prerequisites which should be present before I move to audit your company. Some prerequisites are required. Okay, for example. So what are those prerequisites? Precondition. If, for example, you ask me, Mr. Hamzah, what is your qualification? Have you taught ACCA students before? How long you are teaching? And so on. For example, you keep asking me, I tell you, that's okay, conduct the class. I say, sorry, I don't have internet. I don't have laptop. So these are, even I am qualified, I don't have tools to conduct class. This is required, prerequisite. So similarly, we have assessed ourselves, assessed company, but now preconditions. Two things are preconditions. The first precondition is we need to determine the financial reporting framework which they are using. Now, IFRS to prepare financial statements or something else, whether that is acceptable by law or not. If they are using some different financial reporting framework which is not allowed by law, we will not audit them. This is precondition. And second, while doing auditing, we need to have some information. So management must acknowledge that they have to prepare financial statement as per IFRS. It is their responsibility, not my as auditor mine. Internal control to enable preparation of financial statement is their responsibility. And it is the responsibility of the auditor management to provide auditor all information, whatever is required for audit, whatever staff, whatever I have to interview, whatever accounting record I have to see, the management must provide me. So these three responsibilities of management, they need to acknowledge. Means if they do not provide me access, how can I audit? If they do not accept the responsibility of financial statement, of control, how can I audit? So these two preconditions, if any one of these is not present, we cannot audit the company. So preconditions for audit. Is that clear so far? Tell me, please.
Yes.
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 Good. Let us proceed further. So, students, If any one of these is not present, auditor will not accept the audit at all. Now, so once we are satisfied with the issues, preconditions are present. Now we will sit with the management. We will negotiate terms and conditions of audit. We will negotiate. And once we have negotiated, students, we will put all those things in the document signed by management, signed by the auditor. Okay. So management representative, who will sign? Management representative. Maybe some audit committee person. An auditor, audit partner, they sign that document in which terms and conditions, responsibilities of auditor, responsibilities of the management, all this document is called engagement letter. Means the contract is signed. Now, once engagement letter is submitted, signed by both parties, now I am validly newly appointed auditor of the company for this year. And the previous auditor is removed. Now, these two are important event in the life of the company. When auditor is changed, this is very important event. So that information, that intimation should be made disclosed to all the concerned parties, which the law requires. So auditor and other legal formalities, outgoing auditor's removal, I have to make sure, I am the auditor, that all the notices sent regarding removal of previous auditor and regarding appointment of new auditor. Now then what are the contents of engagement letter? These 5 are mandatory contents. Mandatory. It is mandatory content. 5. In each engagement letter, these 5 items are included. In addition to these 5, that is on the discretion of auditor and management. They can enter any information for clarity purpose, any responsibility for clarity. So for example, what is in the content of objective and scope of audit? What are the purpose? Whether it is an audit required by law? What are the areas of audited? What are the items to be audited by auditor? What are auditor's responsibilities? What are the management responsibilities? What is the relevant IFRS? What will be the content of any reports to be issued by auditor? So these are what will the content and format? So these 5 items must to be mentioned in the engagement letter. And other matters you need not to memorize. I said any other information which auditor thinks that it will enhance the clarity of terms and conditions, which management thinks they are important. So they are included in it. Now, my question from you is, who appoints auditor in a company? Yes, please. Who appoints the auditor of company? My question from you people. Tell me, please.
The board of directors.
Okay, one answer. More answers, please, from more persons.
The board.
No. It is the shareholders. Annual general meeting, they appoint. Yes, board subcommittee, we know that there is an audit committee. Do you know that? Have you heard about Audit Committee?
Yes.
Audit Committee nominates. Means that nominates that who can act as auditor. Ultimately, shareholder choose that in the AGM. Remember that. Yes, if shareholders do not use their right of appointment of auditor as per law, then directors can appoint. Okay, so it is the first right of the shareholders. So whenever to appoint auditor. But you see here, engagement letter is being signed by the management representative. I told you, audit committee member. Yes. Now listen, please. Students, Mr. A got appointed auditor of Coca-Cola in 2021. He audited and he submitted engagement letter at start of audit. Now the next year, Coca-Cola wants Mr. A to audit their financial statement again. Now the question is, do Mr. A need to submit another engagement letter? My question from you. Do Mr. A need to submit another engagement letter next year? The answer is no. The general answer is no, need not to submit. So, students, what they need to do then? They need to, the same engagement letter will serve the purpose, which was in 2021. Need not to submit again. Yes, need not to submit again. But there are certain circumstances when engagement letter has to be revised. What are those circumstances? There is some confusion of responsibilities between auditor and the management. Misunderstanding. Audit terms and conditions are going to be revised. Terms and conditions are going to be revised. Yes, as compared to the last year. Ownership change, senior management change. Senior management actually, audit committee, you know that they actually decide terms and conditions with auditor. If management changed, new management came. So to have understanding, better understanding, engagement letter has to be submitted again. A significant change in ownership. Shareholders appoint auditor. If shareholders change, engagement letter has to be revised. Change in nature and size of the entity business. Nature or size of the business. Business grow, business change. Audit work will change. The amount of work will change. The type of work may change. So engagement letter has to be revised. Laws and regulation change. Financial reporting framework change. Or any reporting requirement change from auditor. Now, so these are the conditions when engagement letter has to be revised in the recurring audits. In the absence of any of these points, there is no need to change engagement letter. Now, students, is it clear so far? Any question?
No question.
Now, next. So the next topic is audit planning and risk assessment. So because we are now validly appointed auditor of the company. Students, planning. By the way, before I proceed to discuss audit plan, tell me one thing. What is the duty of auditor? Yes. Why to do planning? Okay, two questions I asked. First question was, what is the responsibility of auditor? Tell me. Yes, please.
To provide a fair audit opinion.
That's the wonderful point. That's what I wanted to hear from you people. The role of auditor is, the responsibility of auditor is, yes. The responsibility of auditor is that is to report on credibility of financial statements. Yes. Of client. Client means the company he is auditing. This is the auditor's job. Now, students, this is the target to be achieved. Now, in order to achieve this target, there are multiple ways available to reach this target, multiple directions available. Let me give you an example. You have to travel from Pakistan to UK. Multiple directions available. By air, by road. Yes, you must be astonished to see. Yes, by road as well. From Pakistan to Iran, Iran to Turkey, and Turkey to directly entering the Europe. Yes, road is available. And people used to travel by this road before the, this so-called modern era. Now we have the problems at each border, but before people used to travel, even they used to travel by bus from Pakistan to the UK. It used to be traveling like that. Yes, good old times. Now, so then is by sea, ship. So you see directions available. You have to reach the same place. Direction, or you can use combination. You travel by road from one country to the other and then travel by air, or by sea from one country to the other and then from there to the UK by air, for example, hybrid approach. So similarly, auditor is at the planning stage of audits. He has to give audit report of company financial statements. Now multiple ways available, multiple directions available. Now, before I move, come to the audit, come here. From here to there, you will choose that how much long is the travel? How long is the travel? You know that distance to be covered. Second, the second point, what is the risk involved in each option? You see, how much is the time available? Because different routes will take different time. Resources, money required and available. How much required? You see here, these four factors we will decide based on the direction, whether option 1, 2, 3, or a hybrid, any hybrid, any fourth option. So direction has to be chosen out of these four based on these factors. This is called strategy. This is called strategy. This is called strategy. The choosing the direction of considering multiple factors. Now, next point. The next point is, come to the notes. Audit strategy. So audit strategy is basically choosing direction of audit. Different audit methodologies available. We will be studying that. Choosing that based on these factors. Characteristics of engagement means what is the areas to be audited? What are the items to be audited? What is the time available for audit? Whether they want to report us on for the statutory purpose, legal purpose, resources, audit team members, staff, skill, how much is available, how much is required for audit. These same four items. Based on that, you need to choose the direction of audit. That is called audit strategy. You have to choose one or two or the combination of methodology. So audit strategy is scope, timing, and direction of audits. Audit strategy tells scope, timing, and direction of audits. Now, so students, I hope it is clear, or strategy. Now, just see here, come to the same example. So, students, you have chosen this direction. Now you have to make plan as per that. Which airline, what timing I will leave from home, at what time and how I will go to the airport, at what time I will reach. Means all the preparation will be done as per that. If you choose by road, by ship, your plan will change accordingly. Whatever strategy you choose, your plan will be, plan is the implementation of strategy. It is actually putting strategy into action, detailed implementation of that. That is called plan. If strategy is changed, plan will change accordingly. So similarly, audit strategy you decided, your plan will change accordingly. Your audit work will change accordingly. Specific procedure to be carried to implement strategy and complete the audit, and tells what are the risk assessment procedures, audit procedure, and any other audit work to be performed. Now, so students, and it all varies when the direction of the work. Now we are going to discuss audit methodologies. That is the next topic. Okay, audit methodologies. Here is the topic of audit methodologies. Students, one by one, come here. Risk-based audit approach. What is that? What is the risk-based audit? Risk-based audit approach is audit methodologies, audit directions we are going to discuss. One of the methodology is that since auditor has to report on financial statement of the company, whether financial statements have been prepared properly or not. So what they should do, instead of checking all the items of financial statements, wasting too much time, what they should do, The auditor should identify those areas of financial statements which are most likely to be misstated. What does it mean? What does it mean? Now tell me, you are reviewing financial statement of company. Oh my God. And you come to know that company produces machinery, and machinery take work in progress of 3 months in the completion of machinery. Now tell me, being a logical person, immediately it will come to your mind. It will come to your mind that it is work in progress may not have been valued correctly. Immediately, this area. You are reviewing electricity bill. That will not come to your mind that it may be misstated, no? Because it is straightforward item. So auditor identifies those areas of financial statement. You are reviewing items and deferred tax comes in front of you. Deferred tax. Immediately that it may not have been calculated properly. So auditor just marks those areas of financial statement which are most likely to be misstated. Which are most likely to be misstated. And then direct audit effort towards those areas. Which areas? The areas of financial. Yes. Means if we instead of testing those areas where chances of misstatements are low, like I told you, electricity bill, straightforward items, where chances of error and manipulation are quite low. Why to waste time in the testing of that? This is called risk-based approach. This is working smart. This approach is like that. So this is the approach which is recommended by international standards on auditing as well, ISA. This is the approach which is recommended by international standards on auditing as well. Yes. Now, let us proceed further. Risk-based audit approach. Students, it is done. The second type of audit methodology is okay, not this. We are not discussing today this. We will discuss later on. System audit. What is system audit? Students, system audit is that audit of the company Students, in this approach, auditor tests the controls of company. Controls are the processes through which accounting record is kept, maintained, and ultimately financial statements are produced. So auditor tests the controls of company, and then after that, based on that, auditor yes. After testing of control of the company, auditor derives two results. Controls are weak, ineffective, controls are strong, effective. Two possibilities are there: weak or ineffective, and they're strong and effective. Two possibilities are there. If controls are weak, it means that financial statement may contain a lot of misstatements, are likely to contain material misstatements. Yes. Likely to contain material misstatements. Now, so student, it means detailed substantive tests required on financial statements. Detailed substantive tests required on financial statements. Now, next. So what are substantive tests? Friends, they are the tests to detect statement in financial statements. It's called substantive tests. Now, so if controls are strong and effective, less chances of material misstatement in financial statements. Yes. So less detailed substantive tests. On financial statements. This is called yes, students, system audit is clear. Tell me, please.
Yes, sir.
Yes, it's clear.
Yes.
Good. Now, the next is balance sheet approach of audit. What is balance sheet approach of audit? Ultimately, we know that even income statement is closed in balance sheet, statement of financial position. We know that. Yes, we know that. Ultimately, it is closed there. So students, and all account balances are there. Even you know that sale and purchases are affecting receivable, payables, inventory, everything is there. So they say that pick the balances, account balances, and verify all transactions affecting that. If closing balances are verified, and you can verify all the transactions, ultimately everything is verified. Balance sheet approach. Balance sheet approach. So then is income statement approach. They say verify all transactions. If you verify transactions, ultimately account balances will also be verified. You know, balance sheet approach starting from balances, verify balances. It say verify transactions. So both are basically a way to verify financial statement items. Only the direction of work is different. Now come to the notes. Test the transaction income statement. If the transactions are complete, everything is good. Closing balances, verify and come testing till the opening balance. Now, the next is directional testing, but I will take a 5 minutes break and then I will continue the directional testing. Okay, students, I will continue with the rest of that. Okay, students, now I just wanted to discuss one point with you people. You know, this is the September session with us. We are trying to enhance this session in a way. The point is that we have around 17 lectures to complete the syllabus and the practice questions. But this time we are going to do another experience to enhance the preparation of the students, that we are trying to offer a hybrid model. What is the hybrid model? Hybrid model is like that. This is the first time we are going to do. Before, we used to offer the full-fledged the live classes only. Hybrid model is basically what we can say. It is sort of a model like that. You will have every week the new class lectures, the topic wise, they will be uploaded on the website. Means 2, 3, 4 topics over here, videos, which student can watch themselves. And then some practice question will also be the part of that. And then every 3 weeks, I will be conducting a live session. Okay, a live session, 3 weeks, after 3 weeks. And that live session, I will be talking about the further practice questions, further exam focused things. So in this way, we will have in that way, we will have more practice and more, you know, that discussion on the exam level preparation as well. So this is first time we are going to do it, just for the sake of that we can have more time, more effective way. So students, we will be preparing things on a time frame for you people. Okay, and I will be sharing with you people the full time frame within 2 to 3 days of the next 3.5 months, that how the videos will be available and how I'll be conducting the live session with you people. Okay, so the topic which I'm explaining right now, the similar videos will be available to you. So I think if there are any problem, I will be here with you via WhatsApp, and every 3 weeks there will be a live session. Okay, means you will have 2.5 weeks and 3 weeks. You will be watching the videos, doing practice, and I'll be arranging assignments during that time with you. I'll be giving you assignments. You will be sending me assignment. I'll be marking it and send it to you. So this is what we are trying to test this time. Okay, students?
Okay.
Any question from your side? So what we will be doing tomorrow, most probably, we will be uploading 2 to 3 videos more for the next lectures. Means, for example, audit planning, audit risk, and business risk. So these videos will be uploaded, and then I will be giving you a task that this is the time frame you have to complete it and send it to me for the assessment, and then I'll be conducting a live session with you people. Okay, it will be like that. You got my point, everyone?
Yes, sir.
Yeah.
Yes.
So in my opinion, that will be much better. That I am the topic I am explaining, they will be explained the videos the similar way. Nothing will be different. Okay, but the most important thing is, after watching the concept, after grasping, you do practice yourself. You send me the assignment for the marking purpose, and then we have a feedback session, some troubleshoot session every 3 weeks. Okay, so by tomorrow we will be uploading videos and you will have access to that. So I am going to end class now. Okay, so this all what I have discussed today, and what we'll be discussing means the next topic: audit risk, audit methodologies, risk of material misstatement. These videos will be available on the portal by tomorrow. If you have not enrolled, please do enroll now. Okay, you have received the link for enrollment as well via email, every one of you. Okay, and those videos you will be able to access only after doing login. I mean, you will be clicking here, you will not be able to access. You know, here preview is available. For them, it will not be available. You need to log in here, okay, to be able to access that. All right. So thank you. So we will be making a WhatsApp group of all the students. And of course, when we will be making the WhatsApp group, we will be more interconnected as well. So thank you for joining me today. So, tomorrow the WhatsApp group will be created as well. Okay, and videos will also be uploaded. And then we will be interact, and I'll be sharing with you the whole plan as well. God bless you. Take care. Goodbye. Goodbye.
Thank you, sir.
Thank you, sir.
Bye-bye.
Goodbye, sir. Thank you.